We often talk about the big stock exchanges, but what about the actual plumbing, the infrastructure that holds our investments?
Yeah, the backbone.
Exactly. So today, we're taking a deep dive into the financial health of a real cornerstone of the Indian capital markets, Central Depository Services, India Limited, or, well, CDSL.
And they're unique, aren't they?
Yeah.
Asia's only listed depository. That's quite something.
It really is. And
Wow.
serving, get this, over 15.29 crore investors. Just a massive
A
scale.
truly pivotal role they play.
Yeah.
Um, for this deep dive, we've gathered a pretty comprehensive set of materials to really understand their recent performance.
Right.
We're looking at their audited, consolidated, and standalone financial results, not just for the fourth quarter Q4, but also for the entire financial year that just ended March 31st, 2025.
Exactly. So we've got the official statements, consolidated and standalone, an investor presentation, which gives their angle, a
Mhm.
press release summing things up, and even some potential discussion points we've looked at. Our goal really is to cut through all that data and pull out the crucial insights into how CDSL has been doing, give you a clear, concise understanding of their finances and what they've been up to.
Sounds good. So where should we start? The big picture, annual results.
Yeah, let's kick things off with the annual highlights. Fiscal year 2024-25. How did the whole group look? The consolidated performance.
Okay, so looking at the consolidated performance for the full year, the numbers definitely show a period of pretty substantial growth.
Okay.
Their total income hit 1,199 crore. That's a significant 32% increase compared to the 907 crore they reported the year before, FY23-24.
Wow, 32% jump in income. That's quite strong.
It is. And it likely reflects, the overall positive market sentiment and just increased activity we've seen, more trading, more new investors.
Hmm.
That all feeds into CDSL's transaction revenues.
Makes sense. And it wasn't just the top line growing, right? How did profitability look?
Absolutely, profits were up too. The net profit on that consolidated basis reached 526 crore. That represents a solid 25% growth from the euro 420 crore in the previous year.
Okay, 25% growth on the bottom line. So the income growth translated well.
It suggests it did, yeah. Pretty effective translation.
Now, what about CDSL on its own, just the standalone company separate from its subsidiaries? Did those figures line up with the strong consolidated results?
Well, interestingly, the standalone figures actually show slightly even stronger growth in percentage terms.
Oh, really?
Yeah. Their standalone total income came in at 985 crore. That's a 33% increase from the 743 crore the previous year.
Okay, 33%.
And the standalone net profit hit 462 crore, which is a notable 27% rise from the 363 crore before.
So, across the board then, whether you look at the whole group or just CDSL itself, the annual numbers paint a picture of very robust growth. That seems like a key takeaway.
Definitely. Strong year overall.
However, there always seems to be a however, doesn't there?
It often is.
The story seems to take a bit of a turn when we zoom in on just the last quarter, Q4 of FY 24-25. What did the financials show for just those 3 months?
Yes. The quarterly performance presents quite a different trend.
Yeah.
So on a consolidated basis, their total income for Q4 was 256 crore.
Okay.
Now, when we compare this to the same quarter last year, Q4 FY23-24, it's actually down by 4%.
Down 4% year on year.
Yeah. And it's also quite a bit lower, 14% lower, than the income they had just in the previous quarter, Q3 of this same year.
Huh. That's quite a contrast to the strong annual growth figures. What about net profit for Q4? Did that follow the same pattern?
It did, unfortunately. The consolidated net profit for Q4 came in at 100 crore,
Right.
which is a pretty notable 22% decrease compared to Q4 last year, and a 23% drop from Q3.
Wow. Okay, so down 22% year on year and 23% quarter on quarter. That stark difference between the annual growth and this quarterly dip. It makes you wonder if there were specific factors at play, maybe some one-offs.
Indeed, it does stand out. The investor presentation did mention something about increased technology investments, specifically in Q4,
Ah.
which, while that could impact short-term profitability, the idea is that it's meant to bolster their platform for future growth and scalability. So maybe that's part of it.
That provides some potential context, yeah. Makes sense to invest in tech. What about the standalone quarterly numbers for CDSL? Did they mirror the sort of downward trend?
They did, largely.
Yeah.
Standalone total income in Q4 was 205 crore. That's basically flat compared to the same quarter last year, but still down 13% from Q3.
Flat year on year, down 13% quarter on quarter.
Okay, and the standalone net profit was 81 crore. That showed a 17% year-on-year decline. And again, that 23% quarter-on-quarter decrease, same as the consolidated figure.
Right, so it really does look like there was a slowdown, or perhaps those investments really did bite into the profits in that final quarter.
Seems plausible.
Okay, let's shift gears a bit. Something always interesting for investors. Dividends. What did CDSL announce there, especially given that strong annual performance overall?
Right, good question. So the board of directors has recommended a final dividend of 12.50 per equity share,
Okay, 12.50.
and each share has a face value of other euro. Of course, this recommendation needs shareholder approval at the upcoming annual general meeting, the AGM.
Standard procedure. Now, 12.50 per share sounds, pretty positive, but the press release made a point of highlighting that this is considered the highest dividend rate. What's the significance of that phrasing?
Yeah, that's actually a really important point to understand. Back in August 2024, CDSL did a 1.1 bonus share issue.
Ah, the bonus issue, right.
Exactly. So basically, for every share an investor held, they got an additional share free. The number of shares doubled.
Okay, got it.
So while a dividend of euro 12.50 might seem, comparable to past payouts, if you just look at the number, you have to remember the total number of shares out there has doubled.
Right, so per original share, it's effectively, well, it means more overall payout.
Precisely. When you factor in the bonus issue, this euro 12.5 series dividend effectively represents the highest rate per original holding that CDSL has offered. It definitely signals a continued commitment to rewarding their shareholders, even with the larger share base.
That context is absolutely crucial. It's not just the number, it's the number relative to the share base after the bonus.
Okay. Makes sense. Let's move on to CDSL's core operations then. I mean, their main business revolves around accounts, right? What were the key highlights there, business performance-wise?
Yeah, the growth in DMAT accounts is always a huge highlight for them. It really indicates that increasing investor participation in the Indian markets.
So what was the number?
As of March 31st, 2025, CDSL hit a pretty remarkable milestone. They exceeded 15.29 crore DMAT accounts.
15.29 crore. That's just a massive number. These are the BO accounts, right? Beneficial owner accounts.
That's right. Those are essentially the individual DMAT accounts held by investors like you and me. And it's not just the total number, which is huge, but it's also the pace, isn't it? The rate at which new accounts are being opened. What does that tell us?
Exactly. During the whole fiscal year, FY24-25, roughly 3.73 crore new DMAT accounts were opened.
Wow, nearly 4 crore new accounts in 1 year.
It demonstrates really sustained, strong interest from investors and, CDSL's continued effectiveness in just expanding its reach. This surge, I think, could signify a growing awareness of investment opportunities, maybe reaching a wider demographic in India.
Yeah, it definitely points to broader market participation. Now, for anyone listening who might be a bit less familiar, could you just briefly explain CDSL's role? They're called a Market Infrastructure Institution, an MII. What does that actually mean?
Certainly. So CDSL is a critical MII in India. That means it operates under pretty strict regulatory oversight, mainly from SEBI, to ensure the integrity and security of the whole market infrastructure.
Okay.
Basically, they provide the underlying system for holding securities, stocks, bonds, etc., in electronic or dematerialized form. No more paper certificates.
Right, the DMAT part.
Exactly. And they also play a vital role in settling the trades. When you buy or sell shares, they help make sure the shares move correctly and the money moves correctly,
Yeah.
securely and electronically. You could kind of think of them as the essential plumbing of the securities market.
Good analogy. So they're not just serving individual investors like us, they work with a whole range of players in the financial system.
Precisely. They provide these essential services to a really wide spectrum of capital market participants. You've got the depository participants, or DPs. Those are the brokers and banks we open our accounts with.
Okay.
Then there are the companies issuing the shares and bonds, investors themselves, obviously, registrars and transfer agents who handle shareholder records, the clearing corporations that manage risk, and, of course, the stock exchanges themselves. They connect all these pieces.
Right, a central hub. And you mentioned earlier their unique position in Asia. Only listed depository. How does that factor in?
Well, being the only listed depository in Asia definitely gives them a significant profile, maybe even a competitive edge in some ways. It really underscores their scale and the trust placed in their services. Plus, they have this incredibly extensive network, over 570 depository participants spread across the country. That lets them connect with just a vast number of investors. That scale and network are undoubtedly key drivers of their business growth.
Yeah, that reach is hard to replicate. Okay, that makes sense. Now, beyond the core financials and those big account numbers, what were some of the other maybe operational or strategic developments that CDSL highlighted? Anything stand out?
Yeah, there were a few interesting points. One is the appointment of a new secretarial auditor.
Hmm.
They've appointed Mrs. Vassal Doshi and Associates for a 5-year term.
Okay, secretarial auditor.
Right, starting this fiscal year, 25-26, running through to 29-30. Like the dividend, this is subject to shareholder approval at the AGM.
And what exactly does a secretarial auditor do? Why is that appointment noteworthy?
Well, the secretarial auditor plays a really crucial role. They basically check that the company is following all the relevant laws and regulations, especially around things like corporate governance.
Ah, compliance.
Exactly. So appointing a firm like Vatsal Doshi, which apparently has over a decade of experience in compliance and has been peer-reviewed by the Institute of Company Secretaries, it sort of demonstrates CDSL's commitment to keeping high standards of regulatory compliance and, good corporate governance. It's about accountability.
Got it. Signals a strong focus there. What else stood out on the operational or strategic front?
Well, they seem to be actively working on making things easier and more accessible for investors. For instance, they launched new multilingual ECS services.
ECS, Consolidated Account Statement?
That's the one. So now investors can get those statements, which summarize all their holdings across different brokers in their preferred language, not just English or Hindi.
Oh, that's significant.
It could be, yeah. A move towards greater inclusivity like that could really expand CDSL's reach, maybe into previously underserved parts of the population, potentially driving future account growth.
Makes sense.
And along similar lines, they also introduced a multilingual chatbot. It's called CDSL Buddy Saheda 24/7. The idea is to provide round-the-clock support to investors in multiple languages.
Huh. A chatbot in multiple languages. That sounds like a pretty big step for customer experience and just broadening accessibility. It's not just about the numbers, but making the platform genuinely usable for a more diverse base.
Absolutely.
Yeah.
Seems like a smart move. Another thing worth mentioning is they successfully completed their CDSL NEVE at 25 financial literacy campaign.
NEVE at 25.
Yeah, NEVE meaning foundation. It was apparently a nationwide effort, covering 25 cities, including some border regions, and they even held specific sessions for armed forces personnel.
That's interesting. Going beyond the core business.
It highlights, I think, a commitment to promoting financial literacy, which, indirectly could have long-term benefits for market participation anyway. But it's a commendable effort.
Definitely has potential ripple effects for the whole financial landscape. And it seems like they're also looking ahead, thinking about bigger industry trends.
Yes, exactly. They launched a thought leadership report titled Reimagine Digital Trust in Capital Markets.
Okay.
This report was authored by KPMG, the big consulting firm. It suggests CDSL is proactively thinking about how the industry is evolving and the absolutely critical role that digital trust plays and will play in the future.
Yeah, it indicates a forward-thinking approach, not just running the current systems. Good. Now, CDSL isn't just the main company, right? It has subsidiaries. What did we learn about them?
Right. CDSL has 3 main subsidiaries. There's CDSL Ventures Limited, or CVL. They operate as a KYC registration agency, a KRA.
KYC, Know Your Customer. So verifying identities.
Exactly. A critical step for market security. Then there's Centrico Insurance Repository Limited, CRL, that's an insurance repository, holding insurance policies electronically.
Okay.
And finally, Countrywide Commodity Repository Limited, CCRL, which deals with electronic warehouse receipts for commodities. So it shows the group is somewhat diversified beyond just securities.
Right. And did the results give us any specifics on how these subsidiaries are actually doing? Are they contributing much to the bottom line? Any particular trends there?
The investor presentation usually gives a glimpse into their net profit trends, typically over the last 5 quarters.
Okay.
While we might not have the exact Q4 figures in front of us right now, looking at that trajectory helps assess how each one is contributing to the overall consolidated performance. Typically, CDSL Ventures, CVL, being the largest KRA, usually shows the most significant profit contribution.
That makes sense. KYC is fundamental.
Right. The insurance and commodity repositories, CRL and CCRL, they might be in different stages of growth. Maybe their profit contributions are a bit more variable or smaller currently. But yeah, monitoring their individual performance is pretty important for a full picture of the group's health.
So the core depository business is still king, but these subsidiaries add some diversification and contribute to the overall group picture. Okay. Now, digging even deeper. The investor presentation, you said, breaks down revenue and expenses quarterly, both standalone and consolidated.
Yes, it does. Provides a more granular view.
Let's start with standalone CDSL then. What key trends did you notice in their different revenue streams over the last, say, 5 quarters?
Okay, looking at the standalone revenue components,
Yeah.
you can see the fluctuations. Things like annual issuer income fees from companies whose shares are held and transaction charges, those tend to be the biggest and most consistent contributors.
Why, the core fees.
Yeah. Then you have income from IPOs and corporate actions like dividends, splits, etc. That can be much more variable, right? Depends heavily on market activity, how many IPOs are happening.
Yeah, sure, very cyclical sometimes.
Exactly. Dividend income reflects what CDSL earns on its own investments, and then other income is usually a mix of miscellaneous things. Tracking these individual lines really gives you a better feel for what's driving that top-line performance quarter to quarter.
Yeah, you can see where the strength or weakness is coming from.
Yeah.
What about the expense side for standalone CDSL? Major categories and trends there.
Okay, expenses. The primary ones are usually employee costs, IT costs, which you expect to be substantial for a tech-heavy company like this.
Definitely.
Payments they have to make to SEBI and the Investor Protection Fund, IPF. Then general, other administrative expenses, and of course, taxes. And watching the quarter-over-quarter changes in these helps understand their operational efficiency, and what's driving profitability from the cost side. For instance, like we discussed, a jump in IT costs in Q4 might signal those strategic investments we talked about.
Right, it connects back. That level of detail really helps dissect the underlying dynamics. Now, quickly, what about the consolidated revenue and expense breakdown? Did it look much different when you include the subsidiaries, or was it largely the same story?
It largely mirrors the standalone trends, mostly because the core depository business is just so dominant in the group.
Makes sense.
But the consolidated numbers obviously do incorporate the income and expenses from CVL, CRL, and CCRL. So, for example, other income on the consolidated P&L might be boosted by revenue from CVL's KYC services or CRL's insurance repository activities. And similarly, employee costs, admin expenses, they'd reflect the combined total for the parent and subsidiaries. If you saw any really big divergences between the standalone and consolidated trends, that might highlight, a particularly strong or weak performance from one of the subsidiary businesses.
Right, so it gives that complete view of the whole group's financial flow. Okay. The investor presentation also had some key operational metrics, didn't it? Beyond just the financials. What were some highlights there?
Yes, absolutely. Several key metrics give insights into their actual business growth and market penetration. The trend in the number of beneficial owner accounts, the BO accounts, is obviously crucial.
We mentioned the 15.29 crore total.
Right. And the presentation shows a consistent upward trend in that total number over the last 5 quarters, leading up to that impressive figure. Also, the number of new CDSL net accounts opened each quarter shows that ongoing momentum in bringing investors onto the platform.
Okay, so account growth is steady. What about the value of assets they're actually holding?
Good point. DMAT custody. That's the total value of securities held in DMAT form with CDSL, usually measured in lakh crores of rupees.
Right.
That's another vital metric. And the presentation clearly shows a significant growth trend there, too, over the last 5 quarters. It indicates not just more accounts, but also a greater overall value of assets being held within the CDSL system.
So more investors and potentially bigger portfolios being held?
Could be both. Yeah. Reflects new investors coming in and perhaps existing investors increasing their holdings or just market appreciation.
That growth in custody value is a strong sign of their increasing importance. Any metrics related to the companies whose securities are involved?
Absolutely. The number of issuers, that's the companies whose securities are available in DMAT form via CDSL, and also the number of ISINs.
ISINs.
International Securities Identification Numbers. Basically a unique code, like a fingerprint, for every single security, every stock, every bond, allowed for clear tracking and trading.
Got it.
Both the number of issuers and the number of ISINs also show a consistent upward trend over the 5 quarters. It just signifies that CDSL's ecosystem is expanding. More companies are using their platform, and there's a broader range of securities being held electronically within their system.
Okay, so across these different operational metrics, accounts, value, issuers, securities, CDSL seems to be on a pretty solid growth path, really cementing its position in the market infrastructure.
Yeah, the operational picture looks consistently strong.
Right. Finally, before we sort of wrap this up, CDSL also mentions some awards and recognition they've received recently. Why is that relevant here?
Well, these awards, things like being named Market Infrastructure of the Year at the Regulation Asia Awards or CSD of the Year from Asset Service Times,
Mm-hmm.
they basically serve to underscore CDSL's standing and reputation within the financial industry.
Kind of external validation.
Exactly. They highlight their commitment to excellence, innovation, their crucial role. It just adds a layer of credibility and shows how they're perceived by industry bodies and their peers. It's a
Yeah.
positive signal.
Yeah. Always good to see that kind of recognition.
Mhm.
Okay, so to try and bring this all together then, what are the key takeaways? It seems CDSL showed really significant annual growth, both income and profit.
Yes, strong annual numbers.
But the final quarter, Q4, did show a noticeable dip, potentially, as you said, maybe due to increased investments or other factors.
That contrast is important, yeah.
Their recommended dividend, especially when you consider that bonus share issue, that signals a continued focus on shareholder value.
Important context there.
We've seen really substantial progress in demat account growth. That 15 crore number is huge. And they're undertaking some noteworthy strategic initiatives like the multilingual services, the financial literacy push.
Yeah, focusing on accessibility and the future.
And looking at the subsidiaries' performance, plus that detailed revenue and expense breakdown, gives us a much deeper, more comprehensive understanding of the company's financial health and how it operates.
That covers it well.
Yeah,
Which leads us maybe to some interesting questions for you, the listener, to consider.
right. Food for thought.
Yeah. Like, what specific factors, beyond those potential investments, might really have contributed to that Q4 slowdown despite the strong year? Is there more to that story?
Good question.
And how do you think these new strategic initiatives, the multilingual stuff, the focus on digital trust, how will they actually shape CDSL's growth path in the coming years? Will they move the needle?
Impact assessment.
And maybe bigger picture. What does this continued explosion in DMAD counts, now over 15 crore, what does that really signify about the changing landscape of investing in India and the future of the capital markets here?
Some really thought-provoking points to mull over there. And of course, if you're interested in digging even deeper into these numbers, getting a more granular view, we definitely encourage you to check out the original financial results, the investor presentation. They're usually available right there on the CDSL website.
Yep, the source documents are always worth a look for the fine details.
Absolutely. Ultimately, understanding these results gives you really valuable insights into the mechanics of the Indian financial ecosystem and the absolutely vital role that a player like CDSL performs within it.